I'm Carol Messer, along with Matt Miller. Let's take a look at some stocks on the move. Bloomberg News equities reporter Alex Semenova in studio with us. And where do you want to begin?
I'm taking a look at three companies that were selected for inclusion in the coveted S&P 500 index, which, as we know, tends to be a boon for shares, at least in the near term. Carvana, CRH, which is a building materials provider, and Comfort Systems USA, which is an HVAC company. They will be added to the index in a quarterly rebalance at the end of December. So taking a look at the moves today, Carvana soared 12% to a record high. CRH jumped 5.9%, and Comfort Systems actually down a little bit, about 1.2%. But guys, the story really is about Carvana, because what an incredible comeback story.
I'm shocked.
It's unbelievable. It has jumped to around $400 a share, currently from a 2022 low of less than $4. So that is a 10,000% gain. This is all thanks to its efforts to cut costs and restructure debt. That helped boost its earnings. And the company said that it sold a record of about 156,000 vehicles in the recent quarter. I actually yesterday, for the first time ever, saw a Carvana car being delivered. It was pretty incredible. Over to the Upper East Side.
Let's remind everybody, ticker is CVNA. And wow, unbelievable outperformance. I kind of missed that one.
Yeah, and actually our BI analysts predicted all these companies would join the S&P 500. Carvana was kind of expected for a while now.
Ernie Garcia the third. I got to give that guy a call and get him on my program. What's the story with Pepsi? They're giving us a preliminary outlook and talking about layoffs as they wrap up talks with an activist investor.
Yeah, it sounds like Elliott Investment is running the ship over there. Pepsi plans to review its North America supply chain as it's wrapping up negotiations with this activist investor. The company warned workers of incoming, quote, structural changes, which is a euphemism for layoffs. It actually asked many of its workers to work from home.
That is rough.
Very rough. Oh. It's not looking good. Unclear yet what the magnitude of those layoffs will be. But Elliott, for a while now, has been pushing for changes at the company, citing an overly complex portfolio of brands, a declining share of the beverage business, and it is very supportive of this. So cost-cutting efforts here to help boost share prices.
Doesn't it seem rough to lay people off in the middle of December?
Yeah, and also
like time
to say don't come in. Like, I mean, yeah.
I don't know.
It is really rough, the timing.
By the way, the ticker, in case you're wondering, is PEP.
Yeah, well,
easy one.
People aren't going to be so peppy tomorrow.
What are we looking at? Paramount, Netflix, Warner Brothers?
Yeah, so
P-Sky?
that takeover bid is getting just uglier by the day. Feels like something out of an episode of Succession. The latest is Paramount launched a hostile takeover bid for Warner Brothers at $30 a share in cash. This is just days after the company agreed to a deal with Netflix. The offer values Warner Brothers at $108.4 billion, including debt. This compares to Netflix's offer of $27.75 a share in cash and stock for an enterprise value of about $82.7 billion. So it's getting really heated here. Warner Brothers investors deserve an opportunity to consider our superior call. That is what CEO David Ellison said in a statement. And of course, both bids are raising a lot of antitrust concerns. President Trump today spoke about it. He said that he has to kind of take a look at the deal and what the market cap of the final company will be in either scenario.
Here it is. What does Polymarket say?
Polymarket was crazy, dude. Polymarket had 60% odds that this deal would close by the end of next year until Trump said he was worried about the market share and he wanted to get personally involved. Then they dropped to 23%.
It's incredible seeing
I would guess
moves.
they're now in the teens.
Who will close Warner Brothers acquisition? 42% Paramount, 39% Netflix.
Interesting. Either way, this is going to change Hollywood and the media world.
Elizabeth Warren is against both combinations.
What a surprise.
Shocking. Hey, one more. IBM?
Yes. So speaking of deals, IBM also is buying the data streaming platform Confluent for about $9.3 billion. This is one of its largest takeovers yet. IBM will pay $31 a share, according to a statement it issued today. And I know we always hear about one AI deal after the other, and sometimes you're wondering, what do these companies actually do? Like, what is an enterprise?
What is a data streaming platform?
Exactly. Well, I actually have an answer for you. Confluent is in the data corner of the AI boom. It provides a platform for companies to gather or stream and analyze data in real time. And some real-time examples are the manufacturer Michelin. It used Confluent's platform to optimize its inventories. And then also Instacart used it to develop real-time fraud detection.